to the 22nd episode of METACO Talks, a series of live conversations with the people making and shaping the future of institutional digital asset management. Today, we have another special guest. I'm very pleased to have here Mathias Imbach, co-founder and Group CEO at Sygnum, the world's first digital asset bank based in Switzerland and Singapore. Before creating Sygnum, Mathias was involved in multiple engagements spanning venture capital, private equity, and as well consulting. Lately, his main focus has been obviously on blockchain and distributed ledger technology and cryptocurrencies with global projects pretty much everywhere around the globe. Quoting Mathias' own LinkedIn profile, he's been excited about disruptive technologies for a long time, which will impact how he lives, how we live, how he works, how we work, and how he interacts with other people digitally and physically. He enjoys playing a role at the interface of the West and Asia and to bridge the traditional corporate with the innovative technology mindset. Mathias, it's a pleasure to have you here in this call today. I would like to open with the first question regarding your company, Sygnum, which we want to know more about how you got involved into cryptocurrencies and blockchain, and why Switzerland, why Singapore, why these two countries?
Sure. First of all, thank you so much, Adrian, for having me, and also congrats to setting up METACO Talks. It's really a great initiative. I also always enjoy listening to it, and so it's an honor to be here. So to your question, how did I get into crypto? Well, it started in 2012 with very much driven by being influenced by my brother, actually, who started mining and doing stuff in the garage, literally, in this space. And for me, it was then so, okay, interesting. It's about transferring originals, not copies, from me to you in a completely decentralized manner. Just found it fascinating. But then really going down the rabbit hole from 14, 15, when Ethereum, the white paper came out, the protocol was launched. That was for me the way out of how we have been and continue to, in many ways, do things in today's world. I was at that time investing for Mr. Tata in technology companies, and found always these founders talking about how they want to monopolize and monetize the data they're getting from the users. And I found that a bit scary, quite frankly, and that led me to, from a philosophical standpoint, on a very quite libertarian journey, 14, 15, 16, 17, with all these great founders projects, investing in ICOs, learning about all the great innovations. But then also because all about, democratizing capital and democratizing access to great opportunities early. But then in 17, together with my three co-founders, Luco, Manu, and Gerald, whom I've also met in that process over the years, all of whom have also looked at the space from different angles. In 17, realizing, well, it's a great innovation. It's a great, however, it's a bit detached from realities in some sense. And we need to start building bridges between today and future finance on the principle of that future has heritage, a future of future finance, more decentralized financial market infrastructure, but at the same time, a heritage of excellence in banking, regulatory standards, anti-money laundering laws, and that led to the formation of Sygnum.
Makes perfect sense. And how would you say that being a bank actually helps you in this value proposition? Because we've seen in this field many startups and many technology firms that have emerged and been widely successful, and they did not necessarily need to be so close to the regulators. So what is the unique value proposition, and why did you choose to become a regulated bank?
Yeah, for us, it was all about looking at the situation in 17, that industry being very innovative, but at times a bit detached from reality, as I mentioned before, and driven by one key point: lack of trust. Whenever you manage money, people's money, your own money, it's all about trust. And that was lacking a lot. And without that, establishing that trust and that layer of trust on top of a great technology and what it can do and the many use cases it brings, we were just very sure that there will never be broad-based adoption of this technology, so that ultimately the great visions that many of the founders had and continue to have could not really come to fruition, because we can't, utopia, the great utopia of everything will just work as we want it to work in the future. It doesn't work without creating a path towards it. And so we said, there's three principles we want to build our company on. One is no shortcuts in terms of governance. And you see that if you look at our board or advisory board or management team. We said no transaction on our platform before we are regulated. Why? Because we anticipated, and I think a lot of our T17 we're now seeing actually happening in front of our eyes, and I can give you a few examples in a bit, was that if we don't have a transaction before we're regulated, we'll never be in the future looking back, being accused of having a legacy, you know, dragging us down, slowing us down, and then, you know, not being able to push forward. And so we can say we don't have legacy, we can build from scratch, we can build new technology without legacy systems. And so it's basically, it was the hard way. And I remember 2 years ago when we went live as a bank, but we are more a technology group with a banking license than a bank with an IT department, of course. I had quite a number of customers who would say, but you know, you're doing all these checks. If I send you my Bitcoins, if I go to XYZ unregulated platform, it just happens. And these same clients are now knocking at our door and realize, you know what, you were right. Can we please open an account very fast? Because we're seeing what's happening, increased regulatory clarity, but also scrutiny. And many of the players that may have taken a different path are now seeing that. So, so that was our strategy. And I think it's now really paying off.
And when you're speaking about clients, do you mean retail clients like you know, you and I, or do you mean institutional or potentially other banks looking to externalize their services to you when dealing with digital assets?
Yeah, so our mission at Sygnum is to empower everyone everywhere to own digital asset with complete trust. And if you read it or listen to this mission, it would be very clear, you will come to the conclusion, must be retail, must be everyone, everywhere. That is for us also a journey, and we can't do everything at the same time. So we have from the get-go focused on institutional clients, qualified private clients, and banks. Why is that? Because we felt in 17 is the biggest chunk that needs to be from in terms of assets, in terms of also mindsets that need to be convinced to adopt and move into the new world. And so we felt we can contribute to the ecosystem, to the crypto community the most by helping to bridge these two worlds. So our clients are crypto foundations, asset managers, family offices, high net worth individuals, but also banks who which want to start offering such services to their clients.
Well, I assume the more you're facing businesses and institutions, the more you need to be regulated and trustworthy in a way, and have a large balance sheet and show that you're competent and that the regulators are looking at what you're doing. Do you see actually different use cases with these different clients? Are your more retail clients looking at maybe doing more advanced things in DeFi or lending, borrowing, staking, I don't know, whereas your institutional clients are more conservative, dealing with just Bitcoin or the basic cryptocurrencies? How do you see these differences?
Yeah, it's interesting. First, we actually did an analysis of this, and one thing I'm very proud of, that we have very young clients, but also we have 80-year-old clients on the high net worth individual side, right? It's probably there is some correlation between younger clients sending in existing crypto and then doing things on our platform with it, and they're clearly more adept at then using staking services, investing in our asset management products. Or also investing now in new types of tokens on the asset tokenization side. We tokenize the Picasso, for example. And then maybe a bit more older generation, spending a lot of time on understanding our asset management products, the research, still figuring out what is this new world is, and then coming in with fiat, starting with an allocation maybe to Bitcoin, Ethereum, a direct investment, and then along the way figuring out what else you can do. Oh, there's yield, there's access to XYZ, and then starting to dabble with it. On the institutional side, it has often to do with that, we are set up in a way that if you look at our solution, it gets you through, in an asset manager, for example, through an investment committee with all in terms of the audits, the certifications, etc. So it's a lot about the basic services of custody, of trading, and maybe hedging via options if you have a very strong long position on Bitcoin, for example. So and they're only now starting to move into then more advanced things such as investing in asset tokens or staking. That is for traditional asset managers moving into the space in particular.
As part of everything you mentioned, there is one word which I remember more than the other, which is Picasso. You mentioned Picasso, and for many of us, Picasso is a sort of dream. You see it in the museums, you see it on the internet. But you never have the ability to touch it or to own one. And recently we obviously saw that you made this fantastic tokenization of a Picasso. Can you tell us more about why this idea? Who are the investors? If it is actually even a reasonable investment, what is the risk profile? What is the kind of performance you can get, and why it makes sense?
Yeah. So look, I mean, we are in Switzerland here. You know the environment very well. So we have full regulatory clarity how to do this. We have a new DLT law in place, which allows us in an institutional grade manner to create digital representations of also real objects, real assets, without any layering in between, right? Already today you find art funds, etc., with many layers in between and structures. So, but what we could do now, or what we can do with our tokenization stack is, and following these frameworks, legal frameworks and regulatory frameworks, is basically to fractionalize a masterpiece of Picasso as a Fiat Aubert that we chose with our partner Arte Mundi, they've been an art investment company since the end of '80s, so they know the drill, and basically what it does, it gives you direct ownership to a fraction of a painting which costs $5.5 million, and you can already allocate from $5,000 upward, right, to own a fraction of it. And then also more easily transfer it. So you can, with 2 clicks on our Synex platform, it's a secondary market, open trading facility, you can trade these security tokens. And that's just, it's ultimately about providing, and that's why we chose Picasso as one of our first a bit more public projects. It's because it's about emotions. It's about, in the structure that we set up, this painting is of course custodized in a secure way by specialists, but the terms of the investment also foresee that the painting can be lent to museums, etc., to increase its value. And so a lot of the investors that are looking at this, for them it's an emotional thing. They really like the Picasso as a painter, as an artist. They think about, okay, if it's in a museum, I can then take my son, my daughter, I walk into it and say, I own part building. I really believe in it, and it's about the it's creating unique investment opportunities which drive emotions as well. And if you look at the performance, obviously we only tokenize where we also, after due diligence, feel it's a good investment opportunity. I'm not giving investment advice here, of course, but if you just look at facts of the last 30 years, how the value of Picasso paintings have emerged, just see a constant positive yield generation. So it's also quite a safe haven assets in the art world to co-own or own a Picasso. So that's another reason why we also chose this one.
And what I find fascinating is that it used to be reserved to a certain class of the population. Investing in a Picasso or investing in a Ferrari is something that not many people can actually do. And what you're creating as an opportunity by doing so is opening up a market which used to not be open to many people, and therefore giving a new way to diversify and invest your savings, which frankly speaking today with negative interest rates are not very well invested by default. So is it a purpose of your bank and maybe a purpose of yourself to open up these new markets to the general population, or is it just more of a anecdotal way to demonstrate that this is feasible?
No, absolutely. Look, for us, if I look at it from a revenue standpoint, this is an emerging revenue stream. I think the industry is still finalizing the establishment of the infrastructure across the value chain to make this a scalable business. I think we're one of the very few who have an end-to-end product in this space, and we are investing in it, and we're going to continue to do so. We're now offering bond structures, for example, as well, tokenized structures. But the why is clearly very much in line of the mission that I've mentioned before, empowering everyone everywhere to own digital assets with complete trust, to have more choice what you own and how you transfer it in a much easier way. And in that sense, yes. I mean, if I take you back to how we started the conversation, my years of being quite libertarian, 14, 15, 16, 17, democratizing access to capital allocation, to venture opportunities. So that obviously kind of resonates with me in a very, very deep way. But we have to do it in stages. As mentioned again before, we are not, we don't yet offer this to retail customers. So we have to go step by step. But yes, I'm super excited about it. And by the way, that's one element, but equally important is the opening up to other yield and staking opportunities in the space. So we're also heavily engaged with now the DeFi space, right? Even, you know, we are a regulated bank, but we have the strong ambition in 3 phases actually to show the world that these two worlds are not at odds, that they can be integrated, and that in this new world of digital assets, yield generation and staking via liquidity pool, which leverage smart contracts, which are just much more intelligent than we do things today, actually makes sense. So you use the word opening up. In fact, that's our strategic theme of 2021 is opening up across various levers. And so, yes, you summarized it quite nicely.
Well, opening up to DeFi is something which is, I assume, relatively challenging for a regulated company. You know, cryptocurrencies, at least to my knowledge, in Switzerland are pretty well understood by the regulators. There are laws and regulations which you know, a bank can apply today if they want to launch their services. DeFi, some aspects of DeFi are also, I think, well understood today. But if you go in the, you know, dark side of DeFi, well, you know, the most exciting things are happening. Sometimes it's so new and so disruptive that the regulators may not be still familiar with this. So as a regulated bank, how do you tackle this kind of new opportunities? Do you first go to the regulator? Do you ask for forgiveness? What is the strategy?
I'm sure FINMA may also listen, so I'm be very careful. No, look, it's very clear. We have I would say we can be very happy here in Switzerland with the way FINMA goes about things. And I think you've mentioned it. We are lucky to be the world's first digital asset bank. And now in Switzerland, we have 2 banks, Sygnum and SEBA, and that is unique internationally. And that was only and continues to be possible by a very strong and constant alignment with the regulator. So we do not ask for forgiveness. We are in constant, every month in contact with the regulator, also giving an outline where we're headed, what we want to do next. And of course, before we launch such innovative new products, there is a lot of you know, conversations and back and forth with the regulator. I would actually, you know, while we have at Sygnum a lot of technology IP, and doing this in an institutional grade way requires a lot of tech talent and the technology focus, it's equally IP for us, the way we manage the regulatory tech and that process. So it has to go hand in hand. And I can assure you there's lots of paper and digitally though, but going back and forth between you know, FINMA and us before we launch such a product. And in the DeFi, in terms of DeFi, I think we just have to do it. Our strategy is to do it in 3 phases, and I think the second, we have 2 of 3 phases we are done. So first was to just offer access to custody and trading of selected DeFi protocols such as Uniswap, etc. We have about, I think, 6, 7 now on our platform. And second was to add the staking element to it. We've launched, I think we're still the only bank in Switzerland and even more broadly, which offers, for example, Ethereum staking. That's the second phase to, that's also something which brings lots of questions with it, also regulatory wise, tax wise, treatment wise, etc. So we've cracked that. That was phase 2. And phase 3 is now to provide institution grade bank backed access to liquidity pools to yield. So for example, a USDC product with a lending USDC in protocol X, right, which is institution grade and follows the rules in terms of KYC and AML, and that is tricky, and we're in the midst of it, and I'm sure we'll crack it, and it will be a super addition to our product suite.
I imagine. And coming back to my first question about the fact that, you know, what's innovative with Sygnum is not just that you're the first, you know, the first bank, crypto bank globally, but also that you are actually active in 2 main jurisdictions and with 2 different regulators. So how do you manage this? You know, it's already hard, I assume, with one. How have you been able to also have activities and you know, offer a series of services in Singapore?
You know, first of all, it was a very conscious principle at the beginning of when we set it up. By the way, we had 2 founders of the 4 based in Singapore and 2 in Switzerland. That obviously at the inception, that helped a lot to shape at the very fundamental level. These are our 2 hubs. It's a dual headquarter approach, and you know, the DNA is built around these 2 countries, while we of course operate globally. But why? Because there's so many similarities and at the same time complementary differences between the countries. Both stable, small countries where innovation is key to survive and thrive for the economies, right? Switzerland with the heritage of excellence in banking, with a long history in it, Singapore with the growth potential of Asia, but both being stable companies with also open regulators to the field. And I think while in 2017 it was emerging, but maybe not as clear as it is today, I think this was a hypothesis which I'm very happy we took and we doubled down on. We also equally said we're going to stay away from the US. That's the case till today. So everything we do is till today, it's a one company approach across Switzerland and Singapore, and we have to every day, do our work to make sure that we bridge 12 hours of flight in 6 or 7 hours, depending on the season time difference, to make this one company and drive in the same direction. So it's a very fundamental element. So Singapore is not a subsidiary kind of setup. We start internationalizing a bit just to have a footprint and to have it on the website. This is a very core element of our culture and on how we set up. And we also believe that Europe and Asia, from a growth perspective in our industry, are the places to be.
I was going to ask you, when you say Europe, do you mean Europe as a whole, or do you mean specific countries? We've had a series of guests that have given their opinion about this, and some claim that, France is moving fast, or that the US are moving fast. What we personally observe at METACO is that Switzerland and Germany are really leading the race towards adoption of digital assets and DeFi. What is your opinion, and more than your opinion, what do you see through Sygnum?
Yeah, it's very much aligned with your view. I mean, statement number one I would make is that Switzerland is and continues to be at the very forefront in terms of the ecosystem that we're seeing, the teams that are here, the talent that is here, but also the adoption and again, the regulatory and legal clarity. If I'm still waiting for someone to tell me a second country where we have that combination, political stability, legal clarity around DLT, and also regulatory framework where you can have, for example, a crypto bank operating completely in a legal and compliant way in this space. I don't know a second country, quite frankly. There's a few fast followers, but Switzerland is clearly first mover. And to everyone and all the Swiss maybe also listening, this is a huge opportunity for this country and for all of us to, as a community, also us as playing sometimes even as competitors, to actually co-compete and to not just compete, to actually grow the pie and make this stick to Switzerland and grow it massively. But beyond that is, I agree with Germany, even though maybe I'm a bit less, I don't want to say pessimistic, but I just feel that there's a lot of maybe bureaucracy sometimes compared to Switzerland is a bit higher sometimes when it comes to these processes. So we also looked at Luxembourg, which has an interesting angle from a regulatory side. And then also the UK, I feel we should not forget. So that's a little bit what we see in Europe, where a lot is happening. And then in the US, you have, of course, huge innovation drive, but a bit of a mess regulatory wise. And we're seeing with the 5 different regulators looking at different topics, trying to land grab, being in charge for many things. And so this leads to lots of friction. But if you look at innovation that comes from there, they continue to be really also world class from a team's standpoint and what they're driving.
Would you consider them sometimes as competitors? If we think about the large, Coinbase, for instance, that's now listed, I assume they have some activity also in Switzerland. I may be wrong, but do you see them as potentially, targeting the same kind of clientele that you have today, or is it a completely different market?
Well, first, we're staying completely away from the US, right? We don't accept clients from the US as strategic decisions. But of course, there are certain segments of the markets, addressable markets, that there's could be overlap, and particularly on the private side, on individual side, that may have Coinbase accounts, etc. Given that we don't do retail, it's maybe not as big an overlap as for other players. But there is certainly, and what we just feel what we bring to the table is not for example, the broadest offering of hundreds of coins, but we bring that institutional setup, all the reviews that we do of the tokens that we even list, and just that trust layer. And there's also people that just literally want to have their assets in a Swiss regulated bank versus having US exposure also on that front. So I think that the market is more than big enough to complement each other's offering. And of course, Coinbase is obviously still much bigger also than Sygnum. So I'm very impressed by what they've done, and I have nothing bad to say about them.
Mathias, if you had, let's say, 2 minutes to convince the most skeptical board member of a bank that assumes that Bitcoin and cryptos are just used for crime and for, you know, dark web, etc., what would be your pitch? Because, you know, just for the little story, I was no later than, you know, 3 months ago facing the board of directors of a Swiss bank. I had met them already 6 years ago, had the same presentation of Bitcoin already at the time. And I came back 6 years later, you know, a few months ago, and they were still so skeptical, and not only skeptical, but very negative about it, that I thought maybe some banks will actually never want to adopt it until there is a new generation taking over. So what would be your pitch to the most skeptical people around?
Yeah, first, it's very individual, and you need to be in the room with these people. And then I will probably go about it very different ways depending on the person or the group of persons that are there. But fundamentally, I think I would say that while 4 years ago it was okay to maybe for some banks say, you know, Bitcoin, crypto is just for illicit activities, but the blockchain technology is quite interesting. If you'd say that today, I must say it's very naive. And I think many realize this now, that if you have a position as a bank or a banker against cryptocurrencies, that's fair enough. I mean, you can find reasons, that's okay, but think it through. Have a view, read about it, understand it. Don't just blatantly just say it is what it is, because increasingly clients won't accept this anymore. It's just too much has happened in the last 4 years so that this statement just doesn't work anymore. Then I will probably go on and say, look, Bitcoin, yes, you can argue it's maybe not a currency, but look at what it does. It is a human invention which has shown us that it can transfer originals and not copies from me to you at any point in time without intermediary, as long as you have internet. Now, think through, for example, what it would cost to coordinate and put in place such a network globally by, for example, orchestrating partnerships between companies or countries. The complexity of such an endeavor would make it completely impossible. And the value of it as a result, and it has worked more than 10 years without any hacks on the actual blockchain, is massive as an invention. And then I would probably go on and say that if you now think about your kids or grandchildren, and if you spend a day or two with them and then realize that when they game online, they want to buy the digital sword, which is golden, which costs a bit more Bitcoin, or maybe some digital other coin than the silver one, and that they live in this world and it's just very normal to swipe and touch screen versus how maybe the banker has lived in the youth. Just ask the question, why is it then weird that in the future, for example, gold will be digital and the store of value will be digital, and the way if assets can be made smart via smart contracts, that we will do things this way. So I would just plead them to be open-minded and really create an opinion versus just shutting it down on the basis of, oh, it's volatile and there's no value behind it. Yeah, that's how I would try, but it's tough, I know.
Mathias, at the least you convinced me. I mean, I may not be the toughest audience, but you convinced me. I will finish with a question. I want a little insider information about what's your next, let's say, what you will tokenize next. You know, you've done cars, you've done paintings. Are you going to go with NFTs? Are you going to go with, I don't know, are you going to tokenize stars? What is your next idea and what is the next ambition?
I mean, obviously, tokenization is one business unit we're focusing on. We have 4 verticals: venture capital, real estate, mid-cap, and arts and collectibles. We've seen, and you see that with the 2 examples that you've mentioned, wines, Picasso, that we have lots of traction and interest on that side. So you can expect more on that side. But you've also mentioned NFTs, and that's a bit too early to be more specific, but you can also expect to hear from Sygnum in this space in a very exciting way. And apart from that, we continue to just go about our opening up strategy and what we've discussed about, you know, opening up the platform to yield and staking much more and institutionalize that part of the ecosystem is certainly very top of my agenda or our agenda.
Mathias, thank you very much for joining the show. It's been a great pleasure to discuss with you. Our next METACO Talks will be in 2 weeks' time, and we will host Greg Kidd, a serial entrepreneur, ex-CRO at Ripple, a first-round investor in companies like Twitter, Square, Coinbase, Filecoin, and currently CEO at Global ID. I would like to welcome all of you to join again in 2 weeks and to follow us on our social networks and to register on our website to be informed when we have a new episode. Mathias, thank you again, and I look forward to our next discussions.
Thank you, Adrian.